It is the 31st of October 2022. My name is David Hickson, and in today's market update we're going to be taking a look at the S&P 500 and a quick look at the Nasdaq. I'm recording this video very early in the day, and so my data extends up to the end of trading on Friday the 28th of October. Let's take a look at the S&P 500 first, and this is the analysis that we've been speaking about, of course, for many months. We have a prominent trough here in March of 2020, a trough that I sometimes refer to as the pandemic trough. There is the possibility that that trough should be displaced a little bit to the left or to the right because of fundamental interaction, where news events, what was happening in the world at that time, might have distorted the cycle behavior. But in this analysis, we are leaving that 54-month cycle trough over there in March of 2020, and the next trough of interest is the 18-month cycle trough, which I have positioned here at the beginning of October last year. Then, of course, we had a 40-week cycle trough over here in the middle of June, and recently we've been talking about the formation of the 20-week cycle trough. So let's zoom in and take a look and see what has happened. Here is the analysis that we have been looking at with the 40-week cycle trough over here, as mentioned in the middle of June. The position of the 80-day cycle trough has been giving us some trouble, as I've discussed in previous market update videos. This particular analysis has it at a fairly late position over here towards the end of August. I discussed in previous market update videos the possibility that this was a straddled trough positioned over here earlier in August. The difficulty with positioning the 80-day cycle trough has made the identification of the 20-week cycle trough fairly difficult. You can see that in this analysis that I'm showing you, the 40-day cycle trough is over here at the end of September. And in my most recent market update video about the S&P 500, I spoke about the fact that I was expecting another 40-day cycle trough to elapse before the 20-week cycle trough formed in the markets towards the end of October or early November. Well, of course, we are now right at the end of October, and you can see what has happened in the markets. The markets appear to have turned up and have probably formed the 20-week cycle trough over here. So in today's video, we're going to take a look in a little more detail at the potential formation of this 20-week cycle trough occurring a little bit earlier than expected. First of all, I would like to point out an interesting thing that happened on Friday, which is that price crossed up above this 80-day cycle VTL. VTL is an acronym for valid trend line, and this particular VTL joins the peaks of two consecutive 80-day cycles. So if we have a look at the foot of the chart, this is the first 80-day cycle over here, and this is the second 80-day cycle over here as price moves down towards the 20-week cycle trough. And so the first peak, or the peak of the first cycle, is this price over here, right at the top of the chart, and the peak of the second 80-day cycle is this peak over here. This valid trend line, of course, joins those two peaks and extends to the right. And over here on Friday, as you can see, price crossed above the 80-day cycle VTL. When price crosses above an 80-day cycle VTL, it confirms that a 20-week cycle trough has formed in the market. That, therefore, gives us confirmation that this is the 20-week cycle trough. Now, there are some subtleties that I won't go into here, and there are some analysts that might question whether price has in fact positively crossed above that 80-day VTL. It is quite possible that might have been a spike price action because median price has not yet crossed the 80-day VTL, and some analysts wait for median price to cross it. But many Hurst cycles analysts that I know are favoring the idea that the 20-week cycle trough has indeed formed. Let's zoom in a little bit and take a look at this recent price action to discuss in detail how we might have confirmed the formation of the 20-week cycle trough earlier as price started moving out of that trough earlier in October. The first thing to point out when you are monitoring the potential formation of a trough is the bar count. This is the number of days that have elapsed from the 40-week cycle trough that we are fairly confident occurred in the middle of June. You can see that as of today, or I should say as of Friday, because this is Friday's price action over here, as of Friday, there were 133 days that had elapsed. The average length of a 20-week cycle, discovered by Hurst 50 years ago, is 136 days. And so the first thing we do when we're considering the formation of a trough is we watch the number of days that have elapsed, because, of course, as we are approaching the average length of the 20-week cycle, we would expect price to be forming a trough. Is it possible that price is going to suddenly plunge down and form a trough at roughly the average cycle length? It is possible, although a little unlikely. What is much more likely is that this here is the 20-week cycle trough. This information is also displayed visually, of course, in our analysis, as I mentioned in my previous market update video about the S&P 500. This here is what we call the whisker, this green line, and this circle is the circle, and together they make a circle and whisker combination for the 20-week cycle trough. Circle and whiskers indicate the time at which that trough is expected. The circle represents the exact day or bar on which the trough is expected according to the recent wavelength, which is calculated by going back 6 waves of the particular cycle and simply averaging that wavelength. And as you can see, this 20-week cycle trough was expected over here in about the 3rd week of October, only in fact 1 week after this low price point occurred. The whiskers that extend to each side of the circle represent the reasonable range of time in which the cycle trough could occur, and you will notice that this whisker extended all the way here to the end of September. When price enters the range indicated by the circle and whiskers combination, we are certainly on standby for formation of that trough. But would we have had to wait until price crossed above the 80-day cycle VTL to confirm that the 20-week cycle trough had formed in the markets? No, we wouldn't. It's very important to bear in mind that every single day, or with every single bar, we are updating our analysis and we are watching carefully how the cycle action is influencing the price movement. Let's switch to a different chart which considered the possibility that the 20-week cycle trough had formed at this point in the middle of October. Here is that chart, and you can see the pin symbol over there, where I have in fact pinned the 20-week cycle trough below this price point over here. Pinning is a process by which we influence the analysis that Sentient Trader is performing. By influencing the analysis, we can consider what is happening with price action on the basis that that is indeed the 20-week cycle trough. So what do I mean by monitoring price action as it unfolds? What we would do is zoom in and take a look at when we are expecting the next cycle troughs to form. So here is the 10-day cycle trough, and over here is the nest of lows for the 20-day cycle trough. If we were looking at intraday data, we could of course focus on even shorter cycles, such as the 5-day, 2-day, or even shorter than that. We would watch each of these cycles unfold. If we consider the shape of the 10-day cycle as it unfolded, you can see that price clearly rose up to a peak on that Friday, the 14th of October, then dropped down again to a trough which we would position on the Monday, the 17th, then rose up to another peak and then came down again. That is a bullish cycle shape for the 10-day cycle. It has a late peak, and it has of course brought price up to a higher level. Here is our nest of lows again for the 10-day cycle, and so the 10-day cycle trough fairly obviously or fairly clearly formed on that date. I think that was the 21st of October. So we have one 10-day cycle in place, and it is a fairly bullish cycle. If you think back to the other analysis I was showing you, we were considering that this was a trough of only 20-day magnitude. After a trough of only 20-day magnitude, would we have expected a bullish 10-day cycle? The answer was no. because we were expecting price to come down into a later 20-week cycle trough. That was our first sign that this was probably a trough of 20-week magnitude. As price action unfolded, we could extend the same logic and look at the nest of lows for the 20-day cycle trough. So let's take a look at the M shape for the 20-day cycle trough. There is the first part of it, and here is the next part. And here is our nest of lows for the 20-day cycle trough. And so that is very probably the 20-day cycle trough that is formed over there, leaving us with another bullish 20-day cycle shape. The peak has occurred very late, and it has of course brought price up a great deal. The fact that we have a bullish 20-day cycle in this position increases the chances that this is a trough of the 20-week cycle. We can also refer to our FLD for confirmation that the trough that is formed is of greater magnitude than the expected 20-day cycle that we were looking at forming in the middle of October. First of all, here is the 40-day cycle FLD. When price crossed above that 40-day cycle FLD, as it very clearly did last week on Monday, that confirmed that the trough that it was leaving behind it was of at least 40-day magnitude. But you can see that on Monday, price also crossed above the 80-day cycle FLD, this pale blue line here, confirming that the trough was of at least 80-day magnitude. And so last week, we were already aware that that trough was of at least 80-day magnitude. While we are looking at this detail, let's quickly switch to the Nasdaq. You can see that this analysis in the Nasdaq has positioned the 20-week cycle trough over here in the middle of October. There is no pin symbol. I didn't influence this analysis at all. The default analysis in Sentient Trader, considering other influences that I have made in previous months, has positioned this 20-week cycle trough over here. It is very useful and important to keep an eye on different markets, particularly closely correlated markets, because the analysis is often clearer in one market than it is in the other, and that has certainly been the case in the Nasdaq recently. Again, in the Nasdaq, we would have monitored our cycle shapes, and here is the bullish cycle shape for the 10-day cycle. There is the nest of lows for the 10-day cycle right beneath that low point in price. And here is the nest of lows for the 20-day cycle. You can see that over here, price came down to the 20-day FLD. You probably know, if you've been watching any of my videos, that I track a sequence of interactions between price and the FLD, and following a trough of at least 80-day magnitude, we would expect price to cross above the 20-day FLD in what we call an A category interaction. The target for that interaction, as a matter of interest, is 11,900 roughly, and so it has not yet quite been reached, but at about the time that the 20-day cycle forms its first trough, following the trough of at least 80-day magnitude, we would expect price to find support at the level of the 20-day FLD. That is a B category interaction, and as price bounces away from the FLD, that is the C category interaction. This is a perfect example of how we can use the interaction between price and the FLD to monitor what is happening in the cycle analysis. As price came down to the 20-day FLD, if it found support there, that would have strengthened our confidence in the fact that the 20-week cycle trough had formed over here. Now let's take a step back, first of all in the Nasdaq, and then we'll take a step back in the S&P 500 as well, and consider what this means. Here is a 20-week cycle trough, it seems, that has formed in the markets. But this is the bigger picture. This is the Nasdaq, and of course we have a 54-month cycle trough in the Nasdaq in December of 2018. It is different to the analysis we have in the S&P 500. That means that we have had one 18-month cycle elapse until March 2020, a second 18-month cycle elapse into October 2021, and we are now in the third and final 18-month cycle of the current 54-month cycle. That indicates that, of course, we are expecting a bearish 20-week cycle to bring us down into this very big 54-month cycle trough here early next year. And taking a step back in the S&P 500, you can see the analysis is slightly different because we have a 54-month cycle trough in March of 2020 as opposed to December of 2018. That is something that could be debated, but we're not going to debate it now. This means that we are only in the second 18-month cycle. The important thing is that we are still expecting an 18-month cycle trough to occur early next year. And if we take a look at the cycle shapes that have formed since the 18-month cycle trough that formed in the beginning of October last year, you can see a bearish 40-week cycle over here. That's a bearish M shape, of course, with an early peak, and it is bringing price down fairly substantially. Then we have had our first 20-week cycle, and our expectation is for a more bearish second 20-week cycle. But let's zoom in and consider exactly what might happen if our analysis is not absolutely correct. I often refer to the robust nature of a Hurst cycles analysis, because as much as we are expecting a big trough early next year, we might question the magnitude of that trough. Is it possible that that is not going to be an 18-month cycle trough? What if that is only a 40-week cycle trough? Or what if it is only a 20-week cycle trough? A Hurst cycles approach is robust because we can choose the level of our confidence in this analysis. Let me do that now. You can see that I have hidden the diamonds and the circles and whiskers for all cycles longer than the 20-week cycle. That is because I am fairly confident in the 20-week cycle. I'm not that confident in the longer cycles. The usefulness of this approach is that we can focus only on the 20-week cycle, and we can ask ourselves what we are expecting to happen next. The cycle that elapsed from the middle of June until the middle of October was unusual because of the difficulty with this straddled 80-day cycle trough, and so we had a very simple upward move and downward move. We are expecting an M shape for the next 20-week cycle. That is always our expectation. And so in simple terms, we are expecting price to move up to a first peak, come down into an 80-day cycle trough over here in about the second week of December, then come up again, and then come down again. That is our expectation for the next or current 20-week cycle. But now, if this trough expected early next year is a big 18-month cycle trough, we would expect the same thing, but it would have a bearish slant. So we would expect a move up, a move down, another move up, and then a move further down into this trough early next year. However, if we are wrong about this being a big 18-month cycle trough, what is going to happen? It's really very simple. We're going to experience exactly the same cycle shape, but it is going to be twisted to the upside. If we see price heading up much more bullishly than we would expect, then we would still find the same shape and, of course, the same timing in terms of the position of the troughs. But the result would be that we would end up in a higher position early next year for the formation of the next 20-week cycle trough. As this price action unfolds, we're going to be watching very carefully. The first thing that we're going to watch for is where the peak forms in the current 80-day cycle. Here is the expected time for the next 80-day cycle trough in early December. So where is that peak going to be? If we experience an early peak fairly soon and price turns down, that would be a bearish indication. But if we experience a late peak and price moves down into that 80-day cycle trough from a late peak, that would be a bullish indication. The important thing to do is to monitor the M shape that forms in this next 20-week cycle, which will provide greater clarity on our longer-term analysis. I do hope you found this market update useful and interesting. If you have any questions, please join us on our Hurst Cycles Discord server. I will provide a link in the description below this video. And of course, you are very welcome to ask your questions in the comments below this video.